Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar recovered modestly on Monday after Friday's low, of 11-year low that is, of 64.33 and now surging back towards the top side of the range above 65 cents does give some hope that we could see a further rise up towards 65.70 or near this downtrend where the supply zone holds now at 66.45. It is assessed that further weakness should come into play, but first of all let's see how the market plays into the RBA rate decision. It is expected to see a 25 basis point rate cut and therefore would move the historic low of 0.5% for the cash rate. Reading into the statement, if there is further indication that the RBA may cut even further than 25 basis points into the near-term future and maybe taking it down to 0.25, could see the Aussie not slip back to the lows of 64 cents, but towards the lows of around 60 cents as a broader picture. The euro surges further overnight as indication that the Fed may cut rates in its next meeting on the 17th and 18th of this month. Furthermore, we could actually see an emergency rate cut given by the US Federal Reserve Chairman at the weekend after issuing a statement signalling he's open to rate cuts due to the fact of the uncertainty of the coronavirus. At present, the resistance is seen around 111.70 to 112.20 and reassessed from there. The dollar yen has recovered modestly, but not enough to get the market bulls out of trouble. We've still got further risk to the upside in terms of that a challenge of 108.55.60 may fail and therefore see a turnaround back towards the lower side of the range, which is seen somewhere towards 106.80 to 95. The pound is attempting to recover, but at present does question whether the candle that was posted is an inverted hammer, or is it possibly in terms of a pause in the sell-off because of the support seen at 127.25. I do anticipate that we could see a break towards this downside level and therefore see under 127.25 to the region of 126.10. Interesting to see, news sources were seeing that Mark Carney, who is the head of the Bank of England, or the governor, hinted that the UK Central Bank could lower interest rates to support the UK economy during the coronavirus outbreak. Therefore, let's see if the market can take out this level of 127.25. Dollar CAD gets its confirmation from the shooting star after breaking beneath the level of 133.30. It is assessed that we could see further weakness now towards the level of 132.75 or lower down to 132.10.25 and reassess from there. Looking at the 4-hour gold picture, you can see the market is now challenging the resistance seen at 1,598. If we get a break above there, that could see further scope up towards 1,610. It is from there the market needs to break, and above that level would reinstate the upside towards a target of 1,630 to 36. Do be on your guard though, because we could still see uncertainty in terms of how this market will play out after the recent fall on Friday, roughly of $87. Finishing up with oil, well, we've got a Marubozu candlestick, which is bullish, and we can see further indication that the oil's rising. Now looking towards the resistance seen around 48.45 or maybe even higher, up towards 48.95. It is assessed that the candle from here should produce further strength to the bull case. Let's see if the market can rally. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to this new day.